Hello everybody, how's it going today? Today is Wednesday, November 8th. Good morning, good afternoon, good evening to wherever you are in the world. It is 9 in the morning here for me. And I wanted to go over EOS today, right? And first of all, I want to apologize to my viewers. I think I've been rapping and rhyming a little bit too much, right? So I'm gonna definitely stop doing that. You guys have my 100% word, okay, that I will stop rhyming and also rapping, and I'll try to get to the point as much as possible. But I just want you guys to know that that first of all, I'm Asian, okay? I'm Asian, and the reason I rap is because I try to overcompensate in a big way for, the little things that I have in life, if you guys know what I mean, okay? Okay, so let's take a look at some EOS, guys. You guys ready to do this? Let's take a look at EOS. If you want buy and sell signals, you can pay us, but in the end, I promise you, it may cost. I don't want to put you guys in chaos to the point where you pull out your Goldilocks. So sit back, relax, grab your teapots, all make a little bit of money, travel to Barbados, catch them charts like a gray fox. All we got to do is connect them dots, put some makeup on the charts like Avon, do some detective work and be cops, John Travolta and Nicolas Cage in Face Off, turn you all into a big boss, destroy them charts, Grand Theft Auto style San Andreas, hypnotize you guys with the rhymes, put you all in stasis. So for all the people that don't like my rhyme, you're all in anus. Drop the mic. So let's take a look at this chart today, guys. Like I promised you, I'm absolutely gonna stop rapping, okay, guys? I woke up at 4 in the morning today. I woke up at 4 in the morning today because the charts were going off like crazy, right? And then I went back to bed again. Then I woke up to a little bit of sideways action. And then I realized to myself that the only sideways action I ever get is in a chart. Ba-doom. Okay, so we're going to draw our Elliot Wave count just to catch up all the new people that have been coming here. And this is the count, okay? We have 1 there. We have 2 right here. We have 3 right there. We have 4 right there. We have 5 right there. Does this fit the criteria for Elliot Wave, guys? I'd say it does, right? This one here was wave 1 inside of there. This is wave 2, basically. And we get a really, really long extended 5th wave for there. And this is the A, B, and the C correction right here. And this is the final 5th wave. Now, this is a big mess right here. And the way I'm interpreting this is like this, okay? Actually, I want to show you guys a few charts first of all. Let's go to ETP, okay? I want to go to ETP and show you guys how this chart looks. So we have 1, 2, 3, 4, 5 again, and then we had an A, B, C correction, right? And then because it couldn't break out of here after hitting a C point, it actually is now labeled X, okay? And then from X, we have a Y that goes down to here, okay? We have a Y that goes down to here, and from X to Y, we have A, B, C. And then once you hit the C location, it tries to break out again, right? Tries to break out again, but it simply cannot break out of it. So what happens is we get another Y location down over here somewhere. We get a Y location down over here, and then from X, or sorry, not to Y, to Z now. From X to Z, we have another ABC correction. And now here, it's kind of consolidating and doing its thing here, right? So this is basically a triple correction, and that can take a long time to complete. Now, the reason I wanted to pull up this chart to show you guys is because this one is actually really no different from the way I see it right now. The way I see it is like this. Actually, yesterday I wanna go over something really quickly with you guys. Okay, this is my YouTube that I created. This was one of the possible paths that I labeled for you guys yesterday, right? And one of the possible paths, I'm just gonna make it full screen here, is that it would hit around 107, and then it would hit around 114 to 116, right? And then the other scenario was that it was going to travel down here somewhere. Now, it's really important as a trader to not only try to predict, but also react, right? And the reason for that is because if we only make one guess, well, it's really disappointing when things go against us, right? And we have to make a decision on whether to cut our losses as well. But if we expect everything to possibly happen, then it helps us prepare a lot better. And when we can actually prepare for every scenario, it starts to become engraved in our head that if it goes against our possible variation, right, our main choice, that we can just cut our losses very quickly and then just go with the trend that it's going instead, right? Whereas if you don't evaluate both perspectives, then what happens is your mind is set on trying to recover from this one loss. But the way I see it is, if the market goes against my choice, and I can confirm that it's 100% going against my choice, I'll cut my losses really quickly and I'll actually go the other way. So I mentioned yesterday that this was a very nice possible gain, right? And the play to have done was, let's see if I can even bring it up further here. So I mentioned that in this specific point, this is just my YouTube, by the way, if you guys aren't following. Yeah, so I mentioned in this critical apex point right there, okay, is where breakout could happen, because it was following basically all of the trend lines, right? And it finally broke out of it a little bit, right, as we saw. And I mentioned yesterday that if it got to around here, it could be point X, right? And I also suggested another method or another alteration where if it does go down, you can short it to around this target area there, right? So that's really important to understand, that we can never be in the mindset that it's only going to go our way that we predict. And that's why in these videos, I'd like to emphasize that it can go absolutely either way, okay? So I mentioned that there was an X point there. First of all, I want to get into detail to show you guys how accurate it was. So first of all, I mentioned that it would come down to 107, right? If you guys look on the right here, that's definitely 107. And if you look at the top here, that's definitely 116. So I'm not saying that my charts are 100% accurate. Inevitable that I will absolutely be wrong, okay guys? But what is important to emphasize is that we factor in both ways. So there's no doubt in my mind, guys, that yesterday it could have gone the other way as well, right? Because we fell out of this particular area that was holding as a support, right? This key area in here, right in here, it was kind of not holding it, right? So I'm going to draw it in again, right here, right around there. So we had two key areas that we were working with yesterday. One key area was basically this guy right here, right? That was one key area basically, right? And the other key area was this particular wedge right in here. So that was another key wedge area, right? So those are the two different regions that we could have been working with, right? And because it was breaking this resistance a little bit, just kind of hovering around there, I thought that it was possible for it to come down to here as well. But what ended up happening instead was the wedge more so formed like this, I think. And it just reached the end of the wedge, guys. It just reached the end of the wedge and it broke out. And that's a very, very common breakout. And what we can see right now already forming is a lot of resistance to go up. So we're gonna clear this chart right here. Now that you guys know where we actually know, we won't. I was just kidding. We're not gonna share it. We're not gonna clear it. So what I suggested was that we have an A, B, C correction like this, okay? From here, we have an A, we have a B, we have a C. Just right around here. Do you guys notice how, whoops, A, we have a B right there, and then we have a C, which is slightly lower than it. But what's important to make note of is that these lines are actually very symmetrical, right? It actually moved at a very uniform rate pretty much. If we use our Fibonacci extension tool, we can get a gauge of how much it moved down for the future. This one moved down to 618 level only. And if we use our Fibonacci tool, Fibonacci tool, we can actually see that it retraced down to right around this region, right? So this region is still a really possible scenario right around here, which I will gladly draw a box for you guys and girls, gents and ladies, and then degenerates like me. So self-deprecating jokes are my specialty. It's nothing more flattering to a woman than a man who likes to make fun of himself. The only woman I have in my life is my dog, and I'm so happy with her. I don't think anybody could compare to her. I mean, she licks me whenever I want her to, right? And then she loves to beg for food. I mean, that's the kind of woman that I want all the time, who can just eat away her life. It's the best, you know? When you compare the qualities of a dog to a girlfriend, I just think dogs are much more satisfying in general, right? Sure, they have the same qualities as well. They take up all of the bed, you know, and they always beg for food, and they try their best to make you happy. But in general, they're perfect for you. So I'd rather choose a dog any day in my life. So that's my A, B, C correction right here. Okay, I didn't get that much sleep last night because my alerts kept going off. And whenever that happens, I kind of become a little bit more hilarious. So my sarcasm is usually through the roof, so don't mind it, guys. So we have our A, B, C, and then right here we have a massive 5-wave correction, which I will call A, B, C, D, E, F, G. So we have 1, 2, 3, 4, 5 there, right? We can call this one 2, we can call this one B, and then we can call this one C, and we can call this one D. This one, if you look on the higher time frame, it actually just looks like that pretty much. But what you'll notice is the symmetry between all the charts, right? So this one is a leading first wave, one, and I can break it down a lot, guys. As you can tell already, I can break it down with all my wraps. So this one goes something like that, 1, 2, and then 3, and then 4, and then 5. And then this one basically goes A, B, C, okay? And this one ends up making a triple wave pretty much. And it does an A, B, C, a three-wave. Sometimes you can find 3-wave structures inside of waves as well, okay? They happen during correction phases. But I'm not going to draw all those charts for you, just kind of loosely. Here's an A, B, C for there, okay? And then for this one down here as well, I counted as my A, B, C, and then D, and then E, right? So what I wasn't sure was if this wave right here was going to be much more extended yesterday. That's why I was saying that it might have gone down to that other region. So now that we have counted all of our Elliot waves here, and we have a fairly good idea that this is now A, B, C, this is the important thing right here. Okay, guys? I didn't actually catch this wave going up at all, but what I did make a note of was when it hit $1.07, as I pointed out in my video, my alerts went off and I was humming and I was hawing and my dog was just so warm and I was like, I want to get out of bed and straight. She's like, no, you're really warm. You just got to stay in bed with me. I'm like, no, Luna, I got to go make some money. Who else is going to pay for your vet bills, girl? And then she understood right away, and here we are, me trading. So now, what is this right here, okay? What is this beautiful disaster? Is this an uptrend, guys? Would you consider this an uptrend? Look at this volume right here, first of all. Look at this volume as well, okay, guys? We're going to look at this on a higher time frame. And what do you guys notice, first of all? What you guys notice is divergence on the volume, right? Divergence on the volume, which usually indicates that it's not an uptrend, okay? We're going to look at the 4-hour chart. Yes, it is peaking up a little bit, but it's not peaking up at an astronomical amount. What I consider the bearish zone is under 60, okay? And what I consider the bullish zone is over 40, basically. Right now, we are basically in between 40 and 60 exactly, as you've noticed here. And I consider that a neutral zone. Now, we're going to look at the MACD on every single time frame, okay? First of all, this one here, yes, it's a big green candle, guys. Now, you compare the magnitude of this green candle to, for example, this one, or even this one, or even this one, right? This one's really, really tiny. Not only is it really tiny, but there's a big rejection already on the upside. That's usually not a good sign. On a 3-hour chart here, right, it's actually flattening out already, if you guys notice on the top, right, just slightly. So if we actually draw it out, I like to just draw it out to get a visualized representation of it. Does it just look like it's about to do that, right? Rather than look like it's going to go up, right? So if we look on the 2-hour chart as well, we can actually see it coming down already, right? You can see it coming down just like that. On a 1-hour chart, it's probably come down much more heavily already. See, it's coming down, definitely. It's leveling out a little bit, okay? We see a lot of wicks poking up to the top, right? We see a lot of rejection to the top side. What did it for me was on this uptrend right here, this candle. So what I actually did was, I've been playing many bounces. If you guys have seen on my Twitter, I've made a few $100s already. I actually made 25% today of my position size already. And that's a pretty good amount, you know? So even if you played 25, or sorry, we'll say a different number. We'll say 5,000, okay guys? So this is all my trades for the day that I usually like to post. These are all short positions. So 3.8, 2.1, and 1.6%. But they're all leverage, right? Which means you're multiplying it by 3.3. So just as an example, that's up 25%, okay? If I'm playing $1,000 only, guys, and I'm up 25%, that's $250. If I played, say, $10,000, I'm up 2,500% or $2,500 today already. And I posted some pictures of some of the position sizes I play. They're usually ranging from $3,000 to $5,000, depending on liquidity, depending on volume, and a bunch of other factors. So 25% gain for me is a pretty big day, but there are days where I do that all the time, right? I haven't had a down day in 79 days now, like a red day, where I've actually been lost at the end of the day. And the reason why, guys, this is not to pep myself up or anything. I'm just trying to let you guys know that this technical analysis that I'm performing is not hocus pocus, okay? What we try to do is look at every single possible scenario, and we try to account for it going up and account for it going down. So we are much better prepared, right? Imagine an MMA fighter. I'm a big UFC fan. If anybody caught Cody Garbrandt taking a huge loss to Dillashaw, all right, Cody Garbrandt definitely deserved that. I'm a big fan of UFC. And Joanna got her butt kicked by Rose. It was so amazing, the fight. Joanna she's just in Rose's face saying, I'm going to knock you out. The boogie woman is going to come and get you. And then Rose is just closing her eyes and saying, our Father who art in heaven. She's praying, right? And she won the bantamweight, the strawweight championship belt. Oh my God, it was such a good fight. Not only that, my favorite guy represent the Canadian, GSP, George St. Paul, right? Man, amazing guy. Sorry, I didn't mean to say George St. Paul there. I meant to say George St. Pierre, okay? He's Canadian, he's from Quebec, he's my favorite fighter of all time. Michael Bisping got his butt kicked. So anyways, what I'm getting to is, as an MMA fighter, right, you can't just be narrow-minded. You have to account for every single possible scenario. You have to incorporate it into your defense, because if you have a good defense, you'll also have a good offense, right? So that's what I'm trying to get to people. So the way I see this is ABC correction has finished, okay? And then when we zoom into, for example, a 15-minute chart here, we're going to count the Elliot waves. All right, so the way I'm going to count it is from here. I'm going to count it from the point where the 55 EMA breaks out. I'm going to count this one as 1, okay? I'm going to count this one as 2. I'm going to count this one as 3. I'm going to count that one as 4. And I'm going to count that one as 5. And I just want to make sure that it fits a lot of my Elliot wave rules. This one moved up 10 cents. Yes, wave 3 moved back a lot high. Wave 3 moved a lot higher than it. It fits my criteria, and wave 3 should be very similar as well. Absolutely, 100% it fits my criteria. I'm just going to call all of this part up to the 55 EMA, basically just consolidation phase still, okay? Just completely extended to right around over here. So that's how I will call it. And if we actually look at the subwaves of it, we can confirm as well that the charts are right. Here's wave 1, here's 2, here's 3, here's 4, here's 5, here's A, here's B, and here's C. 1, this one's small, you don't see it. 2, 3, 4, and 5, okay? And this one is also very small as well, so we don't really see it in here, but we will absolutely just call that a final 5th wave impulse up. Let's see if we can see it broken down a little bit in here. A little bit. See, if you get it a little bit closer, you can kind of see it. It looks really ugly though, so we're just going to call that all a 5th wave going up. Basically something like this, we'll say 2 and then 3, right? Notice how on the 5-minute chart, it was really, really hard to see it, right? In fact, you don't see anything at all. Yeah, you don't see anything at all, really. Whoops, I'm going the wrong way. There you go. You don't really see anything at all, so you have to zoom in to call a sub-minuet scale. So these are called waves, right? And within waves, there's a lot of subwaves, which are called fractals, okay? Just imagine, like, as an architect or as an engineer, you have basically small waves within waves. And these waves, they ebb and they flow in all charts that we see, okay? And they're all based off of Fibonacci numbers that it uses, where we could use it to find out retracements, right? And these charts are phenomenal. It's a phenomenal way to gauge what the market is doing. Now, don't get me wrong, it doesn't incorporate all fundamental news, but in hindsight, once the waves are completed, they do incorporate fundamental news into these charts, right? So regardless of if some fundamental news comes up or not, it doesn't matter to me, for example, because to me, the charts speak for themselves. I'm not a fundamental trader at all. I'm a technical trader, right? I trade solely based off of charts and also key news. So what I do every morning is I will type in, EOS news. I will search it in Google by 24 hours, or that's posted today, because I want to read the most current subreddits or posts on Reddits. I want to read Bitcoin talk. I want to read major announcements as well that's going on, right? Because it's important to stay in the loop when it comes to news. So this is the way I see it. Now, if you guys noticed here, actually I'm going to zoom out, okay? If you notice, remember we were talking about W, X, and Y? So the way I see this chart right here is like this. I see this as a W, okay? I see this as a W right here. I see this up here as an X, right in here. That's the way I see it right now. I have no other choice but to see it any other way, okay? No other choice right here. 1, 2, basically 3, 4, and 5. That's how I'm seeing it. I'm gonna actually zoom in closer and draw it out. I see 1, 2, 3, 4, and then 5. And then what I see here is an ABC correction to me. I'm not convinced that it's gonna break out yet, guys. Not convinced. So this is, yeah, I guess we'll call it right here. Well, I'm going to call this guy right here A. I'm going to call this one C, right in here, okay? That's how I'm going to call it right now. And if we do look in here, we also see these fractals or subways, 1, 2, and then 3, 4, and then 5, right? And here, if you zoom in even closer, you might even see an ABC somewhere in here. Surely enough, we do see the ABC in here on a 3-minute chart, A, B, and then C. And I was actually posting tweet by tweet on Twitter there, the plays that I was taking. And I was also just calling out my short position that I entered from basically way up there. And I played many, many bounces down here. And that's how I was able to make a 25% gain today, okay guys? And here on the C, we see 1, 2, basically 3. This is an extended wave here. Let me just show you guys what I mean. Okay, we see 1, 2, 1, 2, 3, 4, 5. I guess this could be 3. And then if we go into a minute chart, we might even see it better here a little bit. This one was more like a 3-wave structure coming down, you can say. A 3-wave structure coming down. Here we can kind of see an ABC as well in the 1-minute chart. I don't recommend to even do this or attempt this on a 1-minute chart, okay guys? Until you've read a lot of books on it. Trust me, you don't wanna start off learning things that are a little bit more complicated than what you need to know first. I'm just giving you guys, and I'm not saying that you guys are not capable of learning it. Don't take that the wrong way, okay? You guys are definitely capable of learning it, but sometimes you have to learn how to walk before you can run, right? And the way I analyze it can be a little bit more complicated, and a lot of set of rules need to be followed. And if you don't follow these set of rules, unfortunately, it could really set you back and you could lose a lot of money that way. So always stick to an analysis method that's comfortable to you guys. So let's look at the volume here, okay? Compare this volume uptrend, even this volume right here for the last push there. Do you guys see a lot of volume there compared to there? Not really, right? What I see is basically a correction. I see a normal W correction. Very, very normal to me, this type of volume compared to, this is volume, okay guys? I mean, if I went over here, this is volume. Like, this is some massive, massive volume over here, okay? Right here. Look at this volume right there. And then look at this volume over here. It's not really much volume. It's much easier to see on a higher time frame, okay? That is volume, guys. We're declining every single time. Sure, we're getting a little bit more, but this is very typical of it. Actually, what we're seeing for this most recent candle right now already is an inverted hammer, guys. And we already have 18 minutes in. If it's pushed down just a tiny, tiny bit more, ooh, it's not a good hammer, guys. It's not a good candle to see. Like, for example, here, shooting star, right? The market psychology is that the bulls have tried really hard to push it up, But by the time the candle closes, the bears have regained control and pushed it all the way back down. And that, my friends, is not a good candle for a bearish market, okay? It's not great at all. So this candle, if it comes down to another penny in the next 18 minutes, it's going to be disastrous and we're going to downtrend. So if we look on here on the 2-hour chart, I already see divergence coming down on the MACD, okay? If I look on the RSI, I also see divergence already, guys. And it's kind of following my rule of it can't really break 60 on a higher time frame. So am I led to believe it's an uptrend? Unfortunately not. Unfortunately not, because on the 1-hour chart, I see it diverging as well. I see this one curving up and then rounding off and coming down. On the RSI here as well, sure, I saw it peaking right here, but what I also see is that right here, right? I see it wanting to come down, and then maybe when it gets to around this range, in a few days, it'll break out because that's also wedging. If you look on the 1-hour chart, basically the inverted hammer already formed there, okay? Look at this, okay? The bulls attempted to push it up, but the bears pushed it back down there. That's why there's a lot of volume. Now let's do some basic math. What's 15 minutes of 1 hour, right? Because we're already 15 minutes left, meaning 3/4 of an hour has already gone by. So we're basically 75%, guys, 75% into this 1-hour candle. Would you guys say this volume is even close to that volume right there, or even half of it? I'd say it's more like 1/3 of it, right? So whenever we see an uptrend right here, and then we see, for example, a doji, like this one right here, it usually means that it's the end of the uptrend. So we see this right here, right? It's definitely flattening out, and the MACD as well is about to do that, right? I'm just factoring in the curvature of it, right? I think anybody would agree with me that if we just drew a line, that it could look like that. Yeah, it could absolutely go up like that, but we don't know if it's going to go up like that. We're just using our assumption based on what we see right now and just filling it in, right? So I definitely think it's doing that instead. Whoops. Here, we're already seeing it coming down, right? Just slowly coming down. It just downticked actually right there. We're already in the negative side for the histogram. So what the histogram tells you is that if it is in the positive, it means that it's upticking per candle that forms. If it is downticking like this, it means that it's getting lower and lower, right? So for example, if you guys notice from here, right, on the histogram, up to about, say, this candle here, it's positive, but because the next one is coming down like that, it means that the histogram is actually getting lower. And now it's coming lower, it's actually getting lower again, right? So that's how we can kind of read the histogram. Like this one, for example, just by looking at the histogram itself, we see kind of a bearish divergence just right here, and then we see it flatten out. And if we compare that to here, we'll also agree to it. This one is a bearish divergence, and then it flattens out right over here. So what else do we see, guys? On the 15-minute chart, I see it kind of bottoming out a little bit, slightly getting a higher high, but at the same time, it's not really, or sorry, higher low, but at the same time, it's not really getting any higher than that, guys. If you guys want to see what an uptrend is, do you guys want to see what an uptrend is? I'll show you guys what an uptrend is. Look at the RSI range right here from when we started on November. I'll go even further back, okay? Actually, not up there. That's pretty normal. On the 1-hour chart, okay? Do you guys see it only peaking to like 75 maybe at most, okay? 75. Do you guys want to see what an uptrend is like? Right here. This is what an uptrend looks like. Look at this RSI, right? Not only is that RSI high, but it doesn't really come down below 47 range. And it's peaking at monstrous RSI 90. Okay, 90s, guys. That is so high. Even if you look on, for example, a 5-minute chart, right? Let's say on this one here, it's only peaking like at 80. That's nothing, guys. That's not an uptrend. I'll show you guys what an uptrend is on a 5-minute chart. Right there. Do you guys see this RSI? What do you guys see it peaking at on the 5-minute RSI? 91s. It is monstrous, this RSI zone. Okay, that's even on the 5-minute chart. Would you guys consider this one an uptrend where it can't even peak above 85? I don't know. I don't think it is, guys. I really don't think it is. I don't think I'm bearish biased either. I just am pointing out what I see. And let's break down this chart even more, guys. Just break it down, break it down. Let's clear out some of this stuff right here. This is it was a very profitable day for this specific coin. I can't complain about it in any way at all. And I always go back and forth to coins. If you guys saw some of my trades that I took yesterday for Litecoin, I was also tweeting every single coin, or sorry, every position that I took. And I think I ended up taking home 35% in like 1 hour of trading Litecoin yesterday, which was pretty awesome. Combining it to my 25% today, that's like 60% profit of my whatever I'm putting in, right? So what do we see here now, guys? That is not X, this is X. I see this as X right here. I see this, right? And now I see this as making, excuse me, if I just took this symmetry and I did a 1-to-1 ratio, right over here, what I see, and oh, by the way, how did we know it was going to hit pretty much that area? Well, remember yesterday, first of all, I said around 107. It's because I just simply took two resistance line, guys. One from this area, 107, and one right here from about 116, 117. And if you guys notice, we couldn't even actually break this one at all where B is. That's how we know it's a pretty strong resistance, guys. We didn't even break it twice, once there and once there, okay? So that's what I thought this was. And now if we assume the same symmetry, if I take another ABC correction here, right? That's what I'm going to kind of assume right now. So what I'm looking at is this. So what I'm going to do, guys, is this right here. I'm going to draw a line from up here. I'm going to use only the body of the second one because it didn't get quite a higher high. And now I'm going to do this. And what shape do we see? We see this shape right here. Right? And how do we get this one? Well, we got it from this point B and also this point right here. And that's kind of crazy how it's now staying in that zone, right? So what we broke that was a previous resistance becomes a support. That's how I knew that it would hit 107 at least, right? Or try to break it. And if it did break that, then hey, then it's going to try to break this one here. We got a lot of resistances to break, guys. We got one here, right? We got one, so many different resistances there. We got one there, we got one there, we got one there. It's gonna need a lot more volume than that, guys. Like a lot more volume than that. We need this kind of volume for us to be very convinced of a breakout. Now, don't get me wrong again, I'm not bearish biased. It's just I'm a very conservative trader, okay? That is what has led me to, I guess, a lot of good plays in the past. It's because I've been very careful about how I evaluate and do technical analysis, and because of my playing very cautious, right? And I take high probability setups, it's definitely helped me down the road. The last thing that I do is go into a position and hope or pray. Sorry for a religious statement there, but I don't do that. I don't hope and I don't pray, and I don't just get on my knees and beg to for the market to go my way. What I do is I look for confirmation, guys, and I do not see confirmation of an uptrend. I will 100% scalp during high volatility, but I also day trade and I also take swing position accounts, and I also hold long term for investing. I've got basically 3 Bitfinex accounts, well 4 now, one for my dog in her piggy bank. She's lying. You know what? I just bought her this new doggy bed and it was like $50, okay? Because her old one was getting kind of, gross. So I buy her a new one and she just won't leave her old bed. In fact, right now she's on my jacket on the ground. Like, she loves my winter jacket. She loves that winter jacket and she won't even look at the new bed. It's like, okay, Luna, someone's gonna have to pay for that, and it's not gonna be me, Luna. So, side story there, okay, guys? Anyways, I get really sidetracked often when I don't get a lot of sleep. So what I see is this right here, guys. I see 1, 2, 3, 4, 5. I see a 5-wave correction coming down here now, just slowly making its way down. Making my way downtown. For all you Vanessa Carlton fans. Darn, I'm gonna get a copyright strike for that. I just know it. Whenever I break out into songs with the same tune as, songs that are copyrighted, I always get these copy strike, copyright strikes on my account for infringement. So this is what I see right now, guys. Right? That's what I see, and that's X up there. Do you guys see what I mean? Does that make sense? I'm gonna delete this. So I'm gonna go to the bigger picture. I see this is W, and this is an ABC, and now it's making basically a small W up here. And now this might be the first structure where I've seen a small W, and then I see a Y down here, okay? And I see basically a Y down here, and then after that, we go from there. And then basically what I'll end up calling this, I'm gonna zoom out here to a different time frame. So that's kind of what I see right now. I see it kind of definitely retracing. I mean, look how much we've retraced so far from where it started. We've only retraced about 382, guys. I mean, that's not really much at all. And there's no volume to support it. What it means if it retraces 382 is it retraced 38.2%, right? And that's not really much at all when you factor in the actual volume as well. So what I'm waiting for is I'm waiting for, yeah, I've shorted it from up there. I'm going to be very clear about that I shorted it from 114 already, because I just don't believe it has the conviction and the volume to go even higher. So I'm going to wait for it to get to this point right here maybe, but if it doesn't get there, then I'm actually hoping for this right here, okay? I'm hoping for this right here pretty much, just something like that. And then I will consider this as a first wave where it's going to go 1, A, B, C, D, and E. That's what I'm going to consider it. And this will be the first wave of the 5 going down. Because if we actually take this substructure right here and we clone it, and then we go down to over here, right? I know that's a little far-fetched, but it absolutely does hit this target box still, right? I don't think it'll get that low just based on market sentiment, right? Because it's still fairly bullish, but I want to consider every single possible scenario, definitely. So if it actually hits somewhere right around here, what I will consider this is my first wave down out of 5 waves, okay? So the most important thing to take away from this lesson today is that you want to draw your triangle in here, because that's exactly the formation that it's forming, right? Based on this previous resistance, based on right here. And if we actually get squeezed into this particular triangle, which it looks like it is, right? Well, a descending triangle is pretty bearish, guys, because we're getting lower lows and it constantly keeps testing down here. And with the volume declining, this is a pretty bad candle to have on a 30-minute chart. You know, it's an inverted hammer. We're getting some nasty candles as well. If this one down ticks a little bit more in the next few minutes, the next one could even be scarier. So what I'm going to do is I'm going to see if this pattern right here plays out, right? I shorted from right here already, 114. And I'm not gonna add more to my short, but what I will do is I will short it from right here and add more to my short if I can confirm a stronger downtrend. And I'm actually gonna ride the wave all the way down to where the next support area is. I'm gonna target probably this area right down here. So then now I've got a risk to reward ratio of about 5.7, which is phenomenal. I'll keep my stop loss slightly higher than it, slightly higher than it. And then I have an 11% chance to win right there, or 11% gain possibility. And that's for my like day/swing positions on top of my scalp positions, right? So let's say we started drawing a lot of things on here, okay? So this is what I think it is. That's X, and I think that this is really Y, somewhere down here, where it's gonna still make a correction, okay? That's what I think it's still gonna do, and we're getting basically an extended correction. Now, this is clearly a resistance point, right? Right there is clearly a resistance point, and we're gonna draw a few more things. We're just gonna draw from that point to here pretty much, okay? And we're also gonna draw some more, say from just down over here like that. Right? So if I drew a support right here, which connects to this point, and all of this area right here, and where C basically ended, then the area that we're working with is right in here actually, right? This is the area that we're currently working with right now that we see, but another zone is this wedge that it's squeezing. If I drew it better, something like that we can say, okay, from the highest point down over here, consider those bull traps, take very relevant points like this one, this one, this one, this one, this one, and I draw it all the way down to here, well, it's squeezing, guys. It's absolutely squeezing right now into here, right? Regardless of how I draw it, if I take the highest point and the wick, it's still squeezing. Even if I took, you know, like just these relevant points right here on a higher time frame, it just shows probably a wick, I'm guessing. Let's see. If I just drew like that, for example, whoops, I don't include the body, but still hit there, it's definitely still squeezing to me in here. So we're basically working with a channel slash a wedge, wouldn't you guys agree? And until it's proven otherwise, there's no point of us to assume that it's going to break out, because what we see clearly is this is a resistance now, right? This right here is clearly a resistance that it tried to break, but it couldn't. And every time we see long wicks poking to the top, guys, we end up seeing coming down eventually, right? Look at the long wicks. That's a long wick up there poking through the resistance. And I just can't see it breaking out of it because the RSI just cannot simply get higher. So I'm not convinced of an uptrend, but don't get me wrong. If it does break out of it, guys, I can close my short position anytime. I'm already profitable. I can close it anytime. And if I do, this one right here is a hanging dead man. That's the way I see it. It's a hanging dead man on a 1 hour chart. Do you guys know what a hanging dead man is? This is a hanging dead man, basically. It's not a good candle, right? Like, it's circumstantial, right? It could be, some people consider it a doji, but just imagine a guy pretty much like that, okay? A hanging man. I know it's a pretty bad one to refer it to, but unfortunately, that's the market psychology behind it. When you see these hanging mans, they tend to be really, really bad. So let's see if I can call a hanging man chart. Here's better, right? So for example here, hanging man. So the way I see this candle right now is a hanging man. Do you guys see any other choice but to not call it that? I know there is one here as well, right? Slightly uptrended, but this was on a downtrend, so it doesn't count. On a downtrend, it counts as a support. But on an uptrend, guys, it does not count as a support. It's the opposite. It counts as a bearish reversal. So I got so many signals here that show me there's bearish divergence. Even on the 30-minute chart, we simply could not get a higher high. So I do think it's going to bounce off of there, guys. And it's honestly just a matter of time before it comes down right here, just based on all my Elliot Wave counting that I've done as well, right? So we have 5 up there, and then we have A, B, C, and then we have X right there, right? And then we're going to come down to a Y position. And that's just basically on a different time frame, like on a sub-minuet scale. But in the grand picture, I firmly believe that we're still going to be downtrending to this channel. There's not really a crazy amount of good news coming out. The price is heavily being inflated by the amount of coins that's being added to the market right now as well. We see some really crappy volume, guys, like crappy volume compared to over here. We see wicks that are poking out of it as well. We see a hanging man that's right here that just formed already. Next candle opened up higher, but it's also red already. So how the heck could I even be led to believe that this is not trend? I see this as a double top pretty much, right? And I think it's just a matter of time before people realize that we're not going to break that resistance right now. We're going to come down. So this was the major resistance. If you guys noticed, once again, right there, this was the major resistance. We broke it right here, and it now became a support. That one right there, we broke, right? That's why we're hovering in this area. And now that we have a clear top, we can now draw our zone. I always recommend demarcating the zone that you're working, which is just to define the area and to make sure you draw clear boundaries. So if this was C right here, for example, okay, that's C. And up here was W going up. These double type, I'm going to show you guys in the Elliot Wave handbook, okay, what a WXYZ correction is. You guys know I love this handbook. It's my favorite handbook in the world. Double zigzag, label W and Y, okay, with a corrective wave labeled X. I should remember the pages that they're on by now because I I refer to these books so often. Here's a normal zigzag one, A, B, C, which we had. Sometimes you can get a truncated. Let's see if we can find a truncated C here. No. Here's a WXY, right? We had A, B, C. Now we have basically a triple zigzag up, and then we have a X, and then we have a Y, and then we have another A, B, C within there, okay? This is basically what we had, right? A, B, C. This is called a flat, A, B, C. Now take a look at the chart with me. Right here, we have an A, B, C pretty much, right? This one's more so right there. A, B, C, pretty much a flat or a truncated, whatever you guys want to call it. Either way works out, right? And then it just looks like this one's going to be the Y, or sorry, the X right there, and the Y down there, and it just looks like we're going to get another ABC. So the way you guys would play this is, if it breaks out of here, there's many ways to play it, so please listen to this. The way you would play it is, if it breaks out of there, there's a lot more volume. I'm talking about this kind of volume. You guys make sure that you go in a higher time frame even, right? Actually, we're still quite on an uptrend right now in general. It's still very bullish. On a 2-hour chart, we haven't crossed down yet. So if it does break out even more with more volume, guys, and it breaks this current resistance that we see, this one right here, this is a very important resistance, gentlemen and ladies. This one I just made blue. Because it didn't break it twice, it was rejected already. Will there be a third time? If there is a third time, what you would do is you set your stop loss slightly below the resistance line, right? And then you ride it to the next one. You shoot for the next target right around here. So now you're playing with a risk to reward ratio of 3.5 or 3.15. You have a chance to cut your losses at 3.44%, and then you have a chance to win 10% by shooting for the next one there, okay? If it breaks out over here, possibly, you never know if it can. If it breaks out over here, you're going to shoot for this target right there for the next resistance and test it. Set your stop loss slightly below here. You got a risk to reward ratio of 4.77, and you have a chance to lose 1.54%, and you got a chance to win 7.33%, okay? So never go into a position and hope, guys. Look for confirmation first always, okay? If it breaks down here, I mentioned that I shorted from 114 already. I don't regret that decision at all. I will set my stop loss slightly higher than there. And the next area that's logical to shoot for would probably be maybe not here, because that's where the resistance is, or right there. I'm going to shoot for this area right here. I'm going to add more to my short. I'm going to have a risk to reward ratio of ridiculous. This is what I'm hoping for. I'm hoping to have a stop loss to lose about 1.5%, but I'm hoping to gain about 12% on my swing/day trading position. And I will gladly add more to my short. Risk to reward ratio of 8.31. That is phenomenal, guys. I'd almost be silly not to take that. But right now, we're kind of going sideways, right? We're going sideways, and there's no debating at all that this right here is the zone that we're in, okay? This is the zone right here that we're in. We can't assume anything otherwise yet, right now. But most likely, what will end up happening is, let's say I move this a little bit higher, right? It's more like we're going to be in this particular zone over here, just down the road. I don't think that's a great way to draw it. I'll draw it with some poking out like that, right? I'll move this guy down here a little bit as well. That looks pretty good, right? That could be a zone as well. So either way, there's no indication of us going up yet, guys. Volume does not confirm it at all, nor do the indicators, okay? So that was a really good setup to take right in there, all right? I'm going to do that one more time to show you guys. Right in this particular zone that we're staying in right now, this is the 2-hour chart, might be more visible in there. This one's clearly acting as a support right now, right? Where it had hesitation there, bounce off once there, bounce off twice here. If it breaks out from here, if it breaks out, go long. Go buy into the strength if there's volume confirmation, but the volume is slowly declining here, big sell volume there, but then it's getting lower and lower. So how could we believe it's going up right now? But if it does go up, make sure you guys are ready, okay? I always say that the most important trait of a trader, other than being able to manage risk and controlling your emotions, is to make sure you are reactive, not predictive, reactive, guys. And we are laying out every single possible scenario, okay? Last thing you want is to look at a technical analysis from someone online and they only give you one scenario. Because if you only see one scenario, you only see one scenario. If you only read one type of newspaper in your life, you're only going to have one perspective of a biased view. But if you read multiple publications, right, you read like 10 different types of publications, you're going to be much more well-versed to having your own opinion, right? So make sure you guys are always trying to react. As we're talking, we're already down ticking right here, okay, guys? If there's no pressure to go up, guys, that means that there's pressure to go down. Does that make sense? Always remember that, okay? If there's no pressure to go up, there's usually more pressure to go down, but the opposite does not apply from what I find, okay? Keep in mind that a lot of new coins are being added to the market daily for EOS, and because of that, it's also inflating the price, okay? It's deflating the price. So it's basically taking away value from every single coin that you have because so many more coins are being added to the market. So that's one possible play. If it happens to break out there for some reason, right? Set your stop loss slightly lower than it. If it happens to break out right here, set your stop loss slightly lower than it, then go long. If it doesn't break out there, then make sure you play a short position right here. This is going to be a good short position. Your next target, you know, it might stall, for example, right here a little bit. You guys can cut your profit if you want, if it bounces, right? If that ends up happening, we might end up working with a different region right here. So you might be able to get yourself a 5% gain. If it breaks out of there, then you definitely want to shoot for around this area over here where you can get yourself a 12% gain. So we're laying out every possible scenario, guys. And then also, if it breaks out of that region, then we might be working with this region right here as well, okay? And then clearly, if we break out of all of these regions, guys, then we're going to be working with this new massive region down over here. So either way, regardless of what happens, I'm always ready. And that's how I make sure that I stay profitable over time. There's nothing that surprises me in the market, guys. Nothing at all. I lay out all my cards on the table, you know, I put everything on the table. I look at it going up, I look at it going down, I look at the specific zones that can also play in, right? We looked at one zone right here. We looked at this zone right here as well, right? Now we're looking at this particular zone as well that it could go to. And the big picture is that there's this huge channel / wedge forming. So what I'm going to expect is basically, you know, maybe an A right there. I'm going to expect maybe a B right here. And I'll expect maybe a C right there. So I don't exactly know where this ABC will end, but once this A and this B forms, regardless of where it is, right? Regardless of where it is, we will be able to predict where C is. So just to give you an idea of ETP, for the people that have been following me when I've been analyzing it, it has been point on, this analysis, and OmiziGo as well, because I look at every single scenario. And the people that will evaluate every scenario, they'll make money, right? Because regardless of what happens, heck, they're gonna make money. So here, our A and C double bottomed. Here's another A and C, we're pretty much a double bottom, right? And here, our A and our C again, pretty much double bottomed again. And now we're just doing a consolidation. So every single chart right now, guys, is pretty much doing the same thing. Nothing is surprising me. Do you guys see this general shape? Channel / wedge? Yeah, you see that. Litecoin has been out for a little bit longer than every other coin. What do you guys see about this one? It made a gigantic wedge in here as well, then it broke out, right? And it had many different ABC corrections, and it finally finished. That's why it broke out like a monster. What do you guys notice about OmiziGo as well? Where's OmiziGo? Here we go. OmiziGo. Do you guys see any different in here? I don't. I just see a massive, massive, massive wedge pretty much, or channel. What about IOTA? For the people that have followed me for IOTA, where I suggested that it was a bullish sentiment in the market, you guys must have made a lot of money yesterday because I called out all of this right now that it was going to break out anytime soon, and there was a really low risk to reward, or sorry, a high reward, low risk, and I said that there would be a buy zone basically right down here. If it fell to it, if it fell to it, there'd be a buy zone, and we were too close to it already anyways, so naturally it broke out of the wedge. Notice that this one broke out of the wedge. Notice LTC broke out of the wedge as well, guys. I mean, NEO is probably doing the exact same thing as well right now. That's one of my charts. So, yep, it's doing the exact same thing. I mean, look at this, guys. It's making a huge wedge right here. Just a matter of time, guys, till it breaks out. So for the day traders right now that are looking at EOS, we're a little bit behind because it's a newer coin, right? But nevertheless, guys, if I cleared out everything on here right now and I just drew a line connecting points, okay, just connecting massive points right now, okay, and I drew, for example, a point from here to here, there's no debating at all right now that this is the point where we are playing. And it doesn't really matter what happens in the short term, unless you're a day trader and you're making several trades, right? What matters is this is the zone, and this is going to stay in the zone for a while, guys. It's not just going to miraculously break out, right? Charts don't do that, guys. Charts don't do that. Litecoin is the best one to use as an example because it has been around longer than OmiziGo. It has been around longer than a lot of coins. Look how long. This was a massive uptrend, okay? We're going to go a daily chart, right? This was the massive uptrend right here. And of course, with every major uptrend, there's always going to be a consolidation period. So look at right here, for example, right? This kind of makes a wedge like that. And of course, it eventually breaks out of it, right? All of them. This makes a wedge right here. I can spot these really easily, right? And it breaks out of it eventually, right? This here made a gigantic wedge, but we can even go closer and it breaks out of it. This one here breaks out of a wedge and it breaks out of it. We are in a very bullish market right now, guys. These corrections that you're seeing is basically a huge continuation of a bullish trend in the 2017 year. I want to be clear that 2017 has been a phenomenal year for cryptocurrency. It surged by thousands of % for every single coin. But for everything that runs very fast, it needs to be corrected. And it needs to have a long period of correction because people need to take profit, and it's just how the market works. And because everything is correcting to near, November, December, guys, every single coin, like even Ripple, XRP, they've been around for a really long time as well. Let's take a look at Ripple. I don't trade Ripple anymore. I took it out of my portfolio. No interest in Ripple whatsoever. But let's look at it on Poloniex. Okay, woo, look at this, guys. It's definitely wedging here, okay? Right? And as soon as it finishes here, 2018, do you guys notice a pattern? Every single coin is consolidating from its massive uptrend. And right around 2018, guys, that's where everything is going to explode. And I'm talking about hundreds of % of gain, guys. 2018 is the year for cryptocurrency. I kid you not. It is going to be a wonderful year, and we're going to see such a strong bullish pressure that, I mean, Wall Street, guys. Wall Street is finally thinking about, cryptocurrency. We got so many different markets that are finally hopping on the bandwagon. We got these massive investment banks that are hopping on it as well, right? And there's now media coverage as well. We are going to hit like 8K very soon for Bitcoin. It's the year, guys. It is the year to be investing in cryptocurrency. I think that anybody who has a computer has a chance to profit immensely in 2018. And I have no doubt in my mind that EOS is going to be one of them. You guys know about my story, right? Of how I got started and how I got to quit my job. I invested in Ethereum, guys. I invested in Ethereum. I wrote that article I wrote that article in right here in 2016. For the people that don't know yet, I wrote that article in 2016 of how to mine because I was a big miner of Ethereum. March 2016, guys. And I said to people, I said it very firmly, you have a small chance if you play your cards right to get filthy rich. There was 1 year where $100 of Litecoin became worth $30,000 over just a period of year. What you do with your Ether is up to you. You can hoard it and hope. It will, trust me, it will go up so friggin' much it's gonna blow your face away, right? And I just said, remember that Ethereum is huge. This is the biggest thing to happen on the internet in a long time. And do you guys know how much Ethereum? I had 200 Ethereum. That's it. It wasn't much. It was only $2,000 worth, guys. But my Ethereum, you guys know exactly what it shot up to. And in May, June, that's when I quit my job, and that's when I started trading full time. I've been trading for about 2 years and 3 months total, but you know, a year and so months were part-time. Now I do it full-time because I believed in Ethereum so much. This article got about 150 to 200,000 views, and I firmly believe that EOS is going to be one of those coins, guys, that is going to be very successful. And now I look back on Ethereum, and you guys know what I say to myself? I say to myself, I'm one of those mother mofos who got Ethereum at $10. And I think to myself, why the hell did I not buy it at $1? Man, that kicks me in the butt so much. So that was my one coin. And I have to show you guys just something hilarious, okay? I have to show you guys something hilarious that I wish I could actually buy. And the reason why I spend a lot of time on Ethos or EOS, guys, is because I believe in it, okay? I believe in it so much. If anybody could find me this coin, this right here, I'll give you guys $1,000. My first altcoin, up 1,000%. Metallic Butyran just do it up. So that's how much I believe in EOS, guys. Not gonna deny it. My second coin that I bought was Omize Go, guys. Was Omize Go. If you guys saw me trade it, I was day trading it in my video series of how to make $1,600 in 16 days. Starting with $200. If you guys haven't seen that video series of mine, go check it out. I started with $200 just to show people how easy it is to profit, guys. I started with $200 and I recorded 40 hours of my trade and I made $1,600 in 16 days. And everything is there for you guys to see. So this is pretty much when I started buying it, around the 50-cent range. And I was trading it all the way up to $13, $14, guys. And I shorted this bad boy. Omize Go was my number 2 coin that I was very successful with, and the number 3 coin, guys. This is what I call the Lambo coin, okay? I call this the Lambo coin right now. I call this my Lambo coin, and I have Ethos or EOS just sitting there in Luna's wallet. Luna's my dog, and it's in her wallet. And one day she's gonna open it up with me, and we're gonna be like, "Whoa, it's Lambo time." Okay, maybe that's an exaggeration. I don't plan to make that much on it, but even if it went up to like $10, I'm gonna be super happy about it. But I think I've been talking for a long time. Okay, guys, notice that we've downticked 12 cents already, guys. We've 3 cents. I mean, we downticked from 112. So yeah, I've laid out every single scenario for you guys, right, guys? We're in this massive area. And I've laid out what to play in the short term as well and what to look out for. All the long positions, all the short positions. I apologize, guys. I don't really have set targets. The only target I have, if it does go long, is basically this one again to test, this one, and this one. All the prices over here that you can pause. Now the next target as a resistance is probably going to be right here, right? Is basically going to be this one right here. So I've entered a short position already from I think 114-ish. And just based on what we're drawing, this right here is what we see, that area right here. Would you guys agree that this is the zone that we're playing in right now? So if it breaks, look at that, it's down ticking so hard right now, guys. Like, geez, someone just little resistance. So if it breaks out of here, make sure that you guys go into a short position. I am no financial advisor, but if we're slowly getting lower highs and we're testing this resistance every time, I mean, this could be November 10th. Today is November 8th or so. We'll make it out to there. Why would we not enter that trade, right? We can target all the way down to this area right here, which is where the next relevant resistance is, right? So that risk to reward, possible chance to win 5%. You guys can minimize your risk and take profit there. And then if it goes lower, short it again, all the way to here, right? And then you can, if it bounces to over here, then you can go long. Because we have our, like I mentioned, right? We have our A, basically our B right there, and then we have our C somewhere down there, and then we're making an XYZ correction right now, or WXY. We have our W, we have our X, and then we probably will have our Y somewhere down there. And within our Y, we have our A, we have our B, and then we have our C, just like that, right? And then if that fails, right, then what we have is this. If that fails right there, then we basically have this one right here, WXYZ. We have our W, then we have our X, then we have our Y, and then we have another W, and then bam, we have our Z. Some people just like to call it this for simplicity, which is just A, B, C, D, and E. So either way, I think that this is going to play out eventually. I do believe it's still going to hit, you know, somewhere around 80 to 90 cents there, right? This wedge might not be perfect, right? It might actually be drawn a little bit more like that, for example, so it might even hit lower. But either way, I got no doubt in my mind that we're still in the correction zone, guys. We always have to make note of the volume, okay? The volume is absolutely getting lower right now, but it only spiked up because we were doing the X correction. So there you guys have it. That's my two cents for the day. I hope it's helped out. If you guys enjoyed my video and me ranting a lot and just not ranting, but talking a lot, you know, subscribe, follow me, etc. If you guys really enjoyed my video, send my little puppy a little tip to her exchange wallet and help her buy a Lambo. So other than that, have a great day, guys. And I look forward to seeing you in the future. See you.